The topic we're covering today, it's mystified. It's cosmic for a lot of people, and it should not be. It's easy. It's not simple. It's an easy concept to understand. It's not simple, and therein lies the barrier to entry. We're going to look at structuring, finding a deal, and then ultimately buying and improving your current business, how to do that through roll-ups. And therein lies a fallacy that a lot of people have is we underwrite on our own family bills, right? You look at your family bills, what's coming in, what's going out. You're underwriting for risk acceptance and risk management, if you will. Just recognize that's a hat you wear and you should wear it as a business owner. Ultimately, you buy low and you operate better. You acquire an undervalued asset and then you improve the operations and exit at a premium. If you don't understand how to value your business, you have no business pitching offers to other companies. Why? You'll lose your shirt. It's not going to be a good situation. You could go bankrupt on that. You can get very creative with an unsophisticated owner of a business and it still be a fair deal. And you come out not paying a whole lot for it, whether that's in debt service per month or in overall loan price. Statistically, a lot of people are looking to exit that they don't even know about in the next 10 years, the baby boomer generation, and they don't have a plan. Enter you and me. We're the people who satisfy that plan. Some of these people don't even know that they're sitting on a gold mine. They could sell to private equity for a big price, but instead they may go to another mom and pop who buys them out. It's not what's on the tax return. It's what the owner is actually taking home. Remember, it's earnings before interest, taxes, depreciation, and amortization, because they may buy it outright, right? So they need a clear vision of what the business looks like without any of the encumbrances, without any of my responsibilities. Ultimately, what it boils down to, guys, is think of the value multiple as this. How many years of a payout are you getting at that cash flow? If you're buying something that cash flow is $500,000, free cash flow, we're talking seller discretionary earnings EBITDA, and you buy it at a 4 multiple, you're paying that person 4 more years of that cash flow, if that makes sense. Number one, a low multiple is going to signal higher risk in the business. A high multiple is going to signal lower risk. No kidding. This is very simple, guys. Go to the About Us page. Does the owner look old? Do they look like they're ready to retire? Have they been in business for 50 years and are they 70 something right now? Probably a good sign that they're ready to offload. Industry type must be recession resistant, needs based, blue collar service business. So we're thinking carpet cleaning, plumbing, HVAC, roofing, pest control. My recommendation to everybody on the call is find your adjacent vertical. We know what those look, right? Find something that needs to plug in that you have the capacity for and plug that in. Remember that you're looking for the gaps. If you go to a perfect business, man, that perfect business is likely run by a pretty sophisticated operator. And for a fact, they're probably going to want a high price for it. So you got to be careful with that. Now, it could be that you could get past it, but you're going to want to see inconsistencies, chinks in their armor. And once you see that, you got to pounce because that's your opportunity. Cash flow is everything. If you don't have the cash flow, or if you're behind the 8 ball, you shouldn't be considering this. You should focus on getting to a place of stability first. No one likes to hear that their baby's ugly. People are like, I don't know, I got $1 million company. Yeah, but you're only doing 210 on bottom line, which is not too bad, right? You're at 21% profit margin. I'll give you a 2 multiple on it, right? Here is where you start to make some money. And this is the financial arbitrage that exists within a roll-up. Insurance, utilities, fuel, office supplies. When you consolidate things, guys, you're able to capture some additional savings on some deals like this, ultimately resulting in a 23% net operating profit as opposed to a 15, which were both standalones. Kevin, I'll give you $80,000 down payment right now, and I'd like to ask for you to carry the other $55,000. I'm going to put that on a 15-year amortization, and this is going to balloon in 5 years. So you're going to get payments of $415 a month at a 5.75% interest rate, which is pretty fair for what we got going on right now. No prepayment penalty, so I can pay you off whenever I want to. And at the end of 5 years, I'll pay you the delta. I'll pay you everything else that I owe you. When do you think we can get this purchase and sell agreement started? So now the attention goes back to you as the buyer, and the attention is, why are you not doing it? That's the real question. If you have the money for it and you want the growth, you got to hit yourself in the noggin and say, am I just expecting organic growth for my entire career, or am I going to force some of this growth? If your dreams aren't big enough to scare you, maybe they're not big enough and you should be thinking twice about those. If you can get a deal done off market from a business owner that has never spoken to a broker before, it's a great deal, because guess what, guys? Brokers are going to charge 10% of the overall purchase price, and they're not doing a damn thing. Desperation is where you make a lot of money. But that speaks, Brian, to the fact that a lot of these people, I bought Tiffany Couture off Dan and Judy. It had been in their family since the 70s. These guys were making money hand over fist every Wednesday. All their families taken care of. They got 5 houses. They're like, I'm just ready to be done, man. And people are still altruistic and will sell to you because they want something good to be done unto you as well. The thing that holds a lot of people back is risk tolerance. A lot of people are averse to risk. I don't want to buy another company because it's a headache. If you don't want to buy another company because it's a headache, don't do it. But it's for me. I'll buy it and I'll solve the headache. And after I solve the headache, I'll make the money. But my luxury carpet cleaning just rolled out 45 days ago. And the average job price on that is $650 as opposed to 275. So yeah, case in point, we do Nicolas Cage's dry cleaning, and we reached out to his agent and we were like, we'd like to clean his carpets too. And they're like, we don't want to use Stanley steamer anymore. If Tiffany's going to do it, we'll do it. I'm like, that's perfect.